Hello, my name is Joshua Morrison, an investment analyst here at True Potential. Earlier this week, one of the leading indicators used by economists in the US, this being the Michigan Consumer Sentiment Index, or CSI, shed positive light on US consumption for the first time since December's equity market sell-off. The CSI measures the average confidence level of typical US consumers and is an insightful barometer to gauge future spending. Following the market sell-off in December, this index dropped to its lowest level for 3 years, causing nervousness and uncertainty for investors. However, in tandem with the market rebound experienced in January, this figure is now revised to pre-sell-off levels. Steering away from the US and heading towards the east, positive news also emanated from China. Upon trading close on Friday afternoon, the CSI 300, China's main equity index, was up 28.6% for the first quarter of 2019. This is the highest quarterly performance since Q4 2014. An increase in positive sentiment dispels nervousness for investors, as consumers who feel confident about the economy are also usually more optimistic about their employment prospects. Therefore, they typically have an increased willingness to buy larger scale asset purchases such as houses, but also spend more on smaller discretionary and non-discretionary items such as holidays, food and clothing. The result of this should help spur the economy's growth, as consumption relates to 69.7% of US GDP. China is a major component of emerging markets, constituting 39.72% of the MSCI Emerging Market Index, while also being a key driver of global growth. Following the impact from a combination of trade wars and a highly valued dollar, China's performance over 2018 was highly volatile. However, this recent rebound in equity market performance will have significantly positive implications for this region and global outlook as a whole. With the US consumer confidence recovering again, we can expect to see retail sales starting to push higher. In addition to this, we are also seeing a growing disparity between greater wage growth and falling inflation, the result of which gives consumers more disposable income relative to inflation. The amalgamation of these factors should lead to a steady increase in consumer expenditure. In fact, recent data from the Red Book Index, this being a measure of US retail sales growth, has already indicated that the rebound in consumer sentiment is driving greater consumption. The latest figure showed an increased growth rate of 5.3%, following on from February's rate of 4.2%. In tandem with an increase in equity market performance, the outlook for China's economic growth also got a boost on Friday, following the results of a private survey showing solid improvement in domestic business conditions. Economists now believe that this data is signalling an economic rebound within the region, a phenomenon that investors will welcome with open arms following China's turbulent performance in 2018. Ultimately, as we conclude the first quarter of 2019, we are seeing an increased flow of positive data to support the investment moving forward. Thank you for watching.